Hello, welcome to the weekly technical analysis review for Monday, January the 14th. I'm Rafi Bayajan, currency analyst at xterm.com. The pairs that we're going to look at for this week are the pound dollar, the euro yen, and the Kiwi dollar. So let's start first with pound dollar. We can see there is strong upside momentum at the moment. Stochastics are in overbought territory, though they are flatlining, but we could nevertheless see a possible downside reversal in the near future. The MACD is also looking rather bullish at the moment. It has turned positive above its signal line. If we do see further rises, there could potentially see some resistance at the 61.8% Fibonacci retracement of the downline from 1.3174 to 1.2424. So that comes around 1.2887. A break above that level could then see pound dollar moving towards the 78.6% Fibonacci at 1.3013, and then breaking above that, it would then be able to challenge the October high 1.3174. However, if we do see that downside correction, support should initially come from the 1.28 handle. That's also the 50% Fibonacci retracement. If it does breach that 50% Fibonacci, it would shift the near-term bias to a neutral one, and then it could also then drift further lower to 1.2710. That's the 38.2% Fibonacci, and then further down we would see the downside risks increasing, and we do have an important support zone at around 1.26. If that support area was to be broken, the pound dollar could then head back towards that 21-month low 1.2424. In looking at the more medium-term picture, although the moving averages are sloping downwards, it is fairly neutral at the moment with the risks skewed to the downside. So as long as the price action holds above the 50-day moving average, that neutral picture in the medium term should also hold as well. Let's now turn to euro yen. It is looking fairly bearish for euro yen at the moment. We can see the RSI has turned lower once again, even before reaching the 50 neutral level after recovering from oversold territory in late December. The MACD had also recovered above its signal line. Now it's also at risk of moving back below it. So if euro yen continues to head to downwards, support should come at the 23.6% Fibonacci retracement of the downline from 133.12 to 120.38. So that's around 123.40. If that support is broken, we could then see the 121.70 level. That's a previous support and resistance level, so that could once again come into focus, and then breaching that level, we would see the 21-month low of 120.38 coming back within reach, and that would confirm the bearish picture in the medium term. If we do see though euro yen attempting to recover, resistance should come initially at 125.25. That's the 38.2% Fibonacci. Above that, we have a very important resistance area. We've got that descending trend line, then we've got the 50% Fibonacci at 126.75. So breaking above those key lines, that would help eliminate the downside risks for euro yen, and then it would also then be able to target the 50-day moving average at 127.48 currently, and then above that we have the 61.8% Fibonacci at 128.25, and then breaking above that level would strengthen the upside momentum for the pair. In the medium term though, of course, it remains the structure remains very much bearish. And finally, having a look at the Kiwi dollar, we can see here that the 50-day moving average is in progress of making a bullish crossover with the 200-day moving average. So the pair has been steadily recovering since late September. We can see from the stochastics, it's in overbought territory. It's flatlined there. Potentially, there is a risk of a downside correction. The MACD has just about turned positive. It's hovering just above the zero level. So if we do see further gains in the coming days, resistance should come at the 78.6% Fibonacci from the down leg from 0.6968 to 0.6561. So that's around 0.6880. Above that, the pair could then be able to target that 5.5 months high of 69.68 from back in early December, and then it could then potentially aim for the 0.70 handle, and 0.7064 is the 123.6% Fibonacci. So that's a possible key resistance level to watch for if we do see those strong gains. But at the moment, though, prices are in negative territory with support likely to come at 0.6786. That's where the 50-day moving average currently is. Below that, we've got 50% Fibonacci at 0.6764. Dropping below that level would shift the near-term bias to neutral, and then a key support below that is the 38.2% Fibonacci at 0.6716, and then further declines could see the pair heading towards the 23.6% Fibonacci at 0.6657 before dropping back towards that 2-month low of 0.6561 we saw during that flash crash earlier this year. So that's it from me. Thank you very much for watching, and have a great day.